welcome and good morning or welcome to Market Cafe with me Snehi Shah, and with me today is Ankita Saxena. Now this is a show where we tell you all the global cues that you should be keeping on your radar this morning, all the global stories that we're tracking for you, a global handover coming in from USA, Europe, Asia, as well as in the second half of the show we go domestic and we will focus at what stocks were buzzing yesterday, what stocks you should be keeping on your radar today, what the brokerages are pointing out. So all in all, we will be preparing you for today's trading session. So let's begin the show with the global handover then. Ankita, take us through what the US and European markets did. For US, the Dow keeps clinching gains, is it?
That's correct, but it's happening on the back of two things. First up is that they are seeing a robust earnings season in the US, and also the fact that Fed is of course coming out with the Fed meeting. The Fed meeting is today, and so is the ECB that's happening tomorrow. So Dow is definitely cloaking in gains, and Dow Jones closed higher, notching its longest winning streak in more than 6 years. And traders really weighing the latest earnings reports. Alphabet and Microsoft reported its numbers after market hours. Now, Alphabet quarterly numbers came better than what the street was expecting, driven by growth in cloud. Alphabet shares rose about 7% in extended trading, whereas Microsoft shares slipped as much as 4% in extended trading after it issued quarterly revenue guidance that fell short of analyst expectations. But what's really keeping the market exuberance in the market is the fact that nearly 130 S&P 500 companies have reported their second quarter earnings thus far, and out of those, about 79% have exceeded the analyst expectations. So like I mentioned, Snehi, that is what is really keeping the rally going in the US markets. The Dow Jones rose. It was rather flattish yesterday, but ended the day in the green, up 26 points. This was the 12th positive session and its longest rally since February 2017. The S&P 500 added 0.2% and Nasdaq Composite advanced more than 0.5% in trade. All eyes on the Fed meet that takes place today, and we will be getting you all those details. Moving on to European markets. European markets also closed higher on the back of earnings. The Pan-European Stock 600 index ended the day 0.4% higher, a sixth straight positive session. DAX was up 20 points, rather flattish. FTSE again very flattish, but ended the day in the green. We have the ECB meet that is due on Thursday. So two very big important events. In both the cases, the market is penciling in a 25 basis rate hike. That's what the global Q is saying as of today, Snehi. Tell us what the oil is, where the oil is at. Oil, I believe, is also clocking in gains.
Absolutely, oil is also clocking in gains, and oil prices have risen to a fresh 3-month high on Tuesday as signs of tighter supplies and pledges by Chinese authorities to shore up the world's second biggest economy lifted sentiment for oil. Now, Brent futures settled up 90 cents at around $83.6 a barrel after hitting that 83.8 mark earlier, which is the highest for it since 19th of April this year. Moving on to WTI crude then, that also rose 89 cents to settle somewhere around that $80 mark, just shy of that. The contract earlier rose to $79.9 a barrel, which is also the highest for WTI crude since April 19th. Now, the crude benchmarks have already clinched 4 weekly gains in a row, with supplies expected to tighten due to output cuts from OPEC countries as well as allies. So this is what oil has been doing, and largely positive coming in on Brent and WTI crude as well.
Alright, then let's take you through the events that you need to keep a track of. Today, of course, we have the big FOMC rate decision that will be coming out, and we will be getting you all those details tomorrow morning. On the global earnings front, we have then Coca-Cola and Boeing that will be reporting its quarterly earnings. And back home, we have Tata Consumer Products, Bajaj Finance, Tech Mahindra, Dr. Reddy's, Cipla, Axis Bank, BPCL reporting their quarterly numbers. And a lot of action that we have seen in the couple of weeks gone by in the primary market. Yet another IPO that will hit the D Street is Yatharth Hospitals that will be opening for subscription as of today, and we will be getting you all the details of whether to subscribe for the IPO or not. And amongst the corporate action, we have Shree Cement that will be holding a board meeting to consider raising funds. Those are the events that we will be tracking very closely then.
Alright, those are the events that you should be keeping on your radar this morning, but let's also look at the biggest global macro stories coming in, and the biggest macro cue that markets will be eyeing today, which is the FOMC outcome. Now, after a pause, markets have priced in another 25 basis points hike from the Federal Reserve. The move to mark the central bank's most restrictive policy stance in 22 years, despite signs of cooling inflation. After as many as 10 consecutive rate hikes, the FOMC decided to hold rate hikes last month amid aggressive measures to tackle red-hot inflation. Now, this move would raise the federal fund rate to 5.25 to 5.5 range, so keep an eye out on the FOMC meet.
All right, then we'll shift focus to big tech earnings. As I mentioned at the beginning of the show, Alphabet shares surged in after tradings after the company reported better than expected top line and profits. Largely driven by its cloud computing, second quarter revenues rose 7% to $74 billion from $69.7 billion same year last year. Meanwhile, Microsoft shares slipped after company's revenue guidance for the year fell short of street expectations.
Staying with earnings then, luxury major Louis Vuitton, Moet Hennessy, which is LVMH, surprised Street with a drop in US sales for the second quarter. The company's CFO flagged drop in aspirational consumer spending. While he said he couldn't explain the exact reason for the drop, he added that fading stimulus payments after COVID could have contributed to this. Company's US sales have taken a hit of 1% in the quarter gone by.
And meanwhile, lending US lender Wells Fargo shares surged on the back of company's $30 billion buyback program. The bank announced buybacks days after it reported a 57% jump in the profit in the second quarter, which was lifted by customer interest payments.
And more trouble for jet engines maker Pratt & Whitney after parent RTX said that as many as 1,000 engines have to be removed from Airbus planes and checked for microscopic cracks. RTX Corp said a rare condition in powdered metal meant engines built for the twin-engine Airbus A320neo between 2015 and 2021 have to be taken off and inspected for micro cracks that would point to some fatigue in the engines.
And General Motors wrestling with costs and struggling to build more electric vehicles, that it reported that adjusted pre-tax profit and margins is its key North American market fell from the first quarter despite a jump in revenue and per vehicle transaction prices. The automaker said it plans to invest less in new products and cut operating costs by an additional $1 billion through the end of next year and lifted its full year's profit guidance.
Shifting focus to India then, in some good news for India, the International Monetary Fund or the IMF has raised the GDP growth forecast by 20 bips to 6.1% for the current financial year. Now this comes on the back of a strong domestic demand indicating a strong quarter four, and just back in April the agency had reduced the forecast to 5.9%, downgrading from its previous prediction. Now this can be contributed to a strong GDP growth in the first quarter of calendar year 2023, and we also spoke with Anurag Singh, who's the managing partner at Ansett Capital. So listen into what he had to say on this.
Look, the earlier projection was 2.9. Now it has been raised to 3.1. But and that's the global growth outlook, right? And Indian growth outlook has been, of course, raised by 10 basis points accordingly. But I think part of this confidence comes from the general cool down of inflation within Eurozone and US without really hampering the larger economic activity. Look, the concern last year was that as the Federal Reserve tries to raise rates and control inflation, and same with European Central Bank, so also with Japan, that the global economy will face a massive slowdown. And when that happens, of course, the growth rates will suffer. That has been the bit of a change in picture this year, at least this year. That it might be that the economies globally in US, Eurozone and Japan are more resilient than they appeared, and they might be able to sustain higher interest rates. Because IMF is usually a little optimistic to start with. They are not the, they're not the place from where the bad news really starts, or they are not in the business of projecting the bad news. They're saying we are projecting this, assuming the conditions of today continue.
All right, then with that, it's time for us to slip into a short break. You don't go anywhere. After the break, we go domestic.
Good morning and welcome back, and thanks for staying tuned to Market Cafe with me, Snehil Shah and Ankita Saxena. Let's quickly look at what the Asian markets have been doing then. And Asia Pacific markets were largely down as investors braced for the US Federal Reserve's rate decision tonight, as markets are pricing in an absolute certainty that the Fed will approve a quarter percentage point hike. So let's look at how this is impacting Asian markets, and we will begin with what Australia is doing, because Australia is in focus because the country saw its inflation rate come down from 6 to 6% from the 7% recorded in the first quarter. So that is reflecting largely positive for the Australian markets, up 45 points, up almost 0.6%. So that's looking good for Australia. Followed by that, let's also look at what Nikkei has been doing. Nikkei is up is down 71 points, down nominally 0.2%. So that's what the Nikkei has been doing. Kospi is taking a beating in today's trading session. It is down almost 1%. So Kospi deep down in the red as of now. Followed by that, we also have Hang Seng. Hang Seng is down 0.4%, seeing some nominal losses. There you go. You also have the Hang Seng on your screen. And lastly, followed by that, you've got Shanghai. Now, Shanghai is very nominally down, trading with a downtick of only 5 points right now. Almost 0.2% in the red, but not much happening on Shanghai. So that's what the Asian markets are looking at, largely in the red, trading right now, but trading with very nominal losses. On the other hand, you've got Australia. That's the only index that's trading in the green right now, Ankita.
That's right, Snehi. And also the GIFT Nifty is absolutely flat, down just 7 points. And so are the US futures, actually very, very flat in the red, hinting towards a rather tempered start for the Indian markets as well.
All right, with that, let's slip into a short break. But before we do that,
welcome back. You're watching Market Cafe. Now let's move on to news coming in on the domestic front. Construction company LNT reported good growth in its business for Q1, where revenue jumped 33% on a year-on-year basis. PAT was also up over 40%. The board also approved a share buyback worth 10,000 crores. My colleague Lisa Fernandez is here with all the details. Take it away, Lisa.
Well, LNT reported a very good set of numbers. The numbers came way above what was estimated. It was a beat across all the fronts. The revenue and PAT, they came 17% over the ET Now poll estimates. Revenue, talking about the financials, it was up 33% on year-on-year basis and stood at 47,882 crore, and it was mainly led by the infra segment. EBITDA was up 23%, stood at 4,868 crore. The margin came slightly lower than what was seen in March quarter. It was at 11%, and it came at around 10%, and this was because of high OPEX. Now, talking about the order, they received an order inflow of around 65,520 crore, registering strong growth of around 57% on year-on-year basis, and the order backlog, it stands at an all-time high, and it crossed the 4 lakh crore. Now, the important highlight was the announcement of the buyback. They have announced a buyback aggregating to 10,000 crore, and it entails a buyback price of up to 3,000 per share, and the buyback will be via tender route. Now, in the con call, the management highlighted that if the growth momentum continues, if the robust order taking continues, then the guidance that they have given of 10 to 12%, they can exceed that upper band of the guidance. And talking about the brokerages, Morgan Stanley, they have maintained an overweight on the stock. They have hiked the target price to rupees 2,850 from 2,647 earlier. So this was on LNT reporting good set of numbers.
As far as the trajectory going forward, normally April-June is a good quarter for execution. Depending on the monsoon, July-September becomes a weak quarter. We would like to see as to how the quarters progress before we revisit the revenue guideline. We had given a guideline of some 12 to 15%. Now, if we are able to sustain the good work that we are able to do going forward, it's quite likely that we could be at the upper end of the guidance rather than at the lower end of the guidance. That the improvement in the trajectory of margins as the job mix changes will begin to be visible from Q4, and I expect 24-25 to be a far healthier period in relation to what we are reporting currently.
All right, that's the word coming in from the management of LNT. But let's go back to Lisa because Asian Paints also reported its numbers yesterday, and Asian Paints slumped despite double-digit volume growth in the first quarter. Now, the management cited uptick in volumes in both urban and rural markets and said that the performance in the coming quarters will be largely dependent on the back of rural demand. So, Lisa, take us through the key takeaways of the numbers and break down these numbers for us.
Right, so Asian Paints, they reported inline set of numbers, and post-marketers in the con call, the management said that the growth was driven by volume growth, which came at around 10%. That is what the street anticipated. But value growth, that came in slightly lower than the volume growth. It came at around 8% on year-on-year basis. The uptake in volume growth, that was driven by both urban as well as the rural market. Remember, rural as well as semi-urban market, that was hit last quarter. And the mix in the quarter was led by economy as well as the premium segment. The new product launches that contributed 11% to their total overall revenue. The home growth segment, the home decor segment, that saw some degrowth, and the kitchen and bath segment, that was a bit sluggish. But the management said that they have set up capacities for these segment and they will see improvement going forward in the coming quarters. And the management has aimed a 7 to 8% revenue contribution from this segment from FY26. International business, that was a mixed bag. Egypt, Bangladesh and Sri Lanka, they showed lower demand due to the ongoing economic crisis. And the management said that the performance in the coming quarters, that will be led mainly by the rural market, and they will be watchful of the international market. But they also highlighted one important thing, that they are confident of robust festive demand going forward. So that was on Asian Paints con call.
All right, then let's go across to the management and listen into what they had to say on their quarterly numbers.
Industrial business, obviously on a clear uptick, giving us double-digit revenue growth, and this is a business which has been growing at this rate for the last quite a few quarters to that extent, and therefore clearly the journey has been strong in terms of what we see going ahead. International, a little bit less up to our expectations in terms of what we expected, but I think the forex tightness, the devaluation and so on and so forth are a little bit of challenges, but we still see that I think if we are able to kind of overcome Asia business, I think it will kind of give us good growth and good profits as we kind of go ahead to that extent. Overall, from the point of view of operational efficiencies and other things, a lot of work which is happening both from the point of view of sourcing, formulation, and I think this is adding to the softening of the raw material prices and giving us this kind of benefits in terms of what we are seeing to that extent. So net, I think a great start what we see. Just a flash on to the ESG, I think all of you would have seen our annual reports, which has a strong component of intertwining the business with the ESG numbers in a strong manner. I think a strong progress with respect to the three areas of environment, social and governance in terms of what we have kind of taken up.
All right, let's move on then. And auto majors Tata Motors reported a solid set of Q1 results with a large margin expansion seen to 13.3% from 4.4% on a YOY basis. So let's go across to my colleague Shrishti, who's standing by to break down these numbers for us and understand what aided the performance of this quarter that just went by.
Well, yes, this time around, a stellar set being reported by Tata Motors, definitely surpassing the street estimates. Firstly, when we look at the profit, we were expecting a number close to 2,412 crores, but the company has delivered 3,089 crores in the bottom line. If we look at the margin as well, versus an estimate of 12.2%, 13.3% is what the company has reported as consolidated margins, and a similar performance in revenue as well as the EBITDA. A slight outperformance versus the street estimates is what we have seen. But when it comes to the management commentary and specifically looking at the internals, then they look strong, especially on the JLR front, because this time around the JLR EBIT margin for the quarter was expected to be 5.5% this time. A sequential dip from 6.5% in Q4 we were expecting, but 8.6% is what the company has reported in the JLR EBIT margin. Let's talk about the outlook going ahead. So for the commercial vehicle segment, they do mention that that the demand was impacted on the back of BS6 transition, but they expect demand to sequentially improve in financial year 24. Other than that, for their passenger vehicle segment, they expect the demand to be steady. Some of the upcoming launches are also planned up just ahead of the festive season. But when it comes to their JLR, they do mention that Q2 production and the cash flow is expected to be lower than Q1. The annual summer plant shut down on the back of that. So that could be something that may not be taken very positively, because they are already guiding that Q2 production could be lower, when JLR is already sitting at a strong order book. So that's the commentary coming in from Tata Motors. But overall for Q1, we are seeing that the numbers were ahead of the street estimates. So definitely a thumbs up.
The challenge with the DVR shares has been that of the various, we are amongst the few companies, large companies will probably be the only one having the DVR shares there. This instrument had lost its charm somewhere in 2010 when the regulator had concerns on the use of the instrument, and thereafter it's been restricted only to startups. So while we have tried every trick in the book to infuse liquidity into it in terms of a QIP, a rights issue, putting it in the F&O segment, even then this discount that is there started averaging at about 48% on, if you took at from the beginning to now, the average is about 48% discount is what this is trading at. There is almost a understatement of Tata Motors' overall market cap because of this discount which is there, which despite everybody's best effort is not going away. And therefore we have said, and it didn't matter when we declare a dividend, even then the discounts continued. So therefore that's basically because there is clearly a reluctance to come into this instrument, and therefore the discounts continued as they did. And the solution that we have tried to put together now, I think, cracks this problem fundamentally.
And well, moving on, Canfin Homes said that 3 of its employees in Ambala branch committed a fraud of worth over 38 crores. The company has registered an FIR in the case. My colleague Ankur Mishra is here with all the details.
Yet another fraud has been detected by Canfin Homes. Remember, last year there were 37 accounts which were reported as fraud by the lender, and now there has been FIR which has been filed at Ambala, and the allegations are that there are 3 employees who has committed a fraud of around rupees 38.5 crore. Now the amount may not be bigger, but the problem is that this has been a recurring problem despite the lender having an audit which was completed last year. Remember, even Canara Bank, who is the parent of Canfin Homes, had earlier stated that all is well at the NBFC, and since all the audits are completed, there is no further expectation of any wrongdoing which might be found at the NBFC. But now there is a fresh fraud which has been detected at the NBFC, and the 3 employees who has committed a fraud of around 38 crore, and this has been reported to the police. Now, as far as the provisioning is concerned, that will be provided in the next quarter. However, the amount is less, so the impact on the profitability will be quite minimal.
All right, thanks Ankur for all those details. With that, let's quickly slip into a very short break, but on the other side, we will look at all the stocks that you should be keeping on your radar this morning.
Welcome back. You're watching Market Cafe, and let's go stock specific now. We are already in the thick of the earnings season, as we all know, and big FMCG major Tata Consumer is set to report its Q1 results. My colleague Vinny is here with what the street is really penciling in. Take it away, Vinny.
So talking about the Tata Consumers numbers, what we are expecting this time around, a revenue growth of 12%, profit growth of 18%, while margins a slight bit of an expansion there of 60 basis points. Now in terms of numbers, yes, Narishko, Starbucks, that's expected to perform well. The Starbucks JV with which they have, that started to expect to perform well. On the Indian food beverages, we expect Indian food business actually. First, let's talk about that. We're expecting a 20+% growth in terms of the India food business. The Indian beverage business is expected to see a mid-single single-digit value growth coming in this time around. And obviously in this, Sampann is expected to see a price-led growth on the back of the increased prices that they've taken. So India food business, yes, some price hikes that were taken in at the pulses as well as the poha segment. So India food business, revenue growth, the value growth over there, what we would expect was really 20% plus growth over there. Also, obviously, that momentum, like I mentioned, for Starbucks JV, that's expected to continue, and you expect the ad spends, that's to be a slightly bit lower operating efficiencies and better mix is something that could be aiding the margins of the company. Let's keep an eye out on commentary in terms of demand environment, tea, coffee prices, the inflation over there, what's the concern, what is the outlook on that front, as well as the international business update is something that we're keeping an eye out on.
All right, thanks Winnie for all those details. We will be keeping an eye out on all those factors for Tata Consumer. But moving on then, Axis Bank is also all set to report its Q1 results today. So let's go across to my colleague Harsh Saita to understand what is expected from the bank and what should we be watching out for.
Well, your net interest income for Axis Bank expected to come around that 12,000 crore mark, which is a solid 28% uptick on a year-on-year basis, just about 1% or 2% up sequentially. But margins largely will see a bit of contraction. So your margin number is expected around that 4% mark. So some amount of margin pressure starting to creep in into Axis Bank. Let's quickly move on to operating profit. That's expected to go up by 50% or thereabouts. 8,900 crore odd is where your operating profit is expected to come in at. Of course, other income last time, Q1 FY23, which is the base, was slightly subdued, largely on the back of those treasury losses which most banks were booking, so may not be a like for like. Let's quickly move on to provisioning. Provisioning is expected around the 900 crore mark, which is a huge uptick when I'm looking at it sequentially, but it will start normalizing because the base has been extremely low for Axis Bank. Profit after tax expected around the 6,000 crore mark. Of course, the last quarter there was a one-off, the Citi acquisition itself, but outside of that, on a year-on-year basis, you are expecting to see profit after tax grow a solid 45%. Where the NPAs are concerned, you'll start to see slight uptick in NPAs because we have seen the larger banks also start to see a little bit of an uptick, and Axis will also expect to see that. Where advances as well as deposits are concerned, you're expected to see good growth on both sides of the balance sheet. 20% plus is the hope, of course, and the market expectation. Have to wait and watch on that number, but that will be crucial because delivering on growth for Axis is going to be key. Margin contraction, cost ratios will continue to remain elevated, your OPEX will remain elevated, and credit costs are expected to come in benign. Largely expected a solid quarter from Axis Bank.
All right, then solid quarter coming in for Axis Bank then, and we'll move on to another one, Bajaj Finance, that is all set to report its Q1 results. Let's go across to my colleague Vamakshi to understand what the street is really expecting from the NBFC. Take it away.
Well, yes, when we look at Bajaj Finance, a good set of numbers are expected from this counter. But before we get into the expectations, let's first look at the Q1 operational update that came in from the company back in June. When we look at the AUM, that stands at around 2.7 lakh crore, which is an uptick of almost 32% on a year-on-year basis is what they had reported. Other than that, the company was also on track to beat the upper end of its 11 to 12 million customer acquisition guidance quite comfortably. Now, coming to the expectations, well, NII growth is expected to lag the AUM growth, and that is because analysts are expecting a bit of a pressure as far as the NIMs are concerned, or they're expecting it to remain rather stable on a quarter-on-quarter basis on account of rise in cost and borrowings. Net interest income as a result is expected to see an uptick of almost 27% coming in on a year-on-year basis. They're also expecting to see improvement in cost efficiencies play out this time around. PPOP, that is pre-provisioning operating profit, is also expected to come in nearly 27.4% higher as a result. Net profit growth is also expected to be quite healthy on a year-on-year basis. In fact, PAT is expected to come in at 3,300 odd crores. An uptick of almost 27% is what we're expecting on a year-on-year basis. So when you look at all the headline numbers, a strong growth is what we're penciling in, but the provisions are expected to see a slight bit of an uptick on a sequential basis, up nearly 8% on a quarter-on-quarter basis is what we're expecting the provisions to be. Asset quality, as far as that is concerned, GNPA was at the lowest level that we saw in FY23. It was at 0.94%, and in fact, analysts analysts are expecting Bajaj Finance to post an improvement here as well. Largely, we will be keeping an eye out on the ability of the company to sustain its growth momentum. We'll be keeping an eye out on any commentary relating to the competitive pressure in the space, the entry of Geo Financial Services. We will also be keeping an eye out on the NIM and business outlook, as well as the introduction of new products and the ability of the company to scale up. So all in all, a good set of numbers is what we're expecting from Bajaj Finance.
All right, thanks, Vamakshi. We will be keeping an eye out on all these factors for Bajaj Finance. But while you're with us, also share with us what the brokerages are keeping on their radar this morning. I believe you have notes from Jefferies, Morgan Stanley and Macquarie. So take us through what they're keeping on their radar this morning.
Well, yes, let's first look at Asian Paints. The company came out with its Q1 numbers, and the brokerages are largely implying that there was good growth seen across the segments, and market share gains from local players was seen in the economy segment especially. The management is also appearing to be quite optimistic as far as demand is concerned, and they believe that there is limited impact from players such as Grasim. So all in all, Morgan Stanley has maintained its underweight call given a target price of 2,702 per share, while Macquarie has maintained its outperform call and hike the target price from 3,800 to 3,900 per share. But all in all, it looks like positive commentary from brokerages as far as Asian Paints is concerned. The next stock on our radar is LNT. We have brokerages indicating that there was very strong execution in core business, and that has actually come in as a positive surprise. The buyback quantum is showing confidence in the future cash flow generation, and the valuations point to re-rating in the historical context. So all in all, Jefferies has maintained its buy rating, while Morgan Stanley has maintained its overweight rating. And important to note that both these brokerages have hiked their target price as far as LNT is concerned. Other than that, we also have Tata Motors on our radar. Brokerages are highlighting that JLR as well as the India CV business are driving the earnings beat in this counter, but they're expecting that the PV margins were weak this time around, and going ahead they're seeing upside risk to margins. That is a positive for Tata Motors. The India EV ramp-up story will likely play out in 2024 for this counter. So brokerages, as far as Morgan Stanley is concerned, they maintain their overweight call. Jefferies has maintained their buy call and hiked up target price to 800 rupees per share. And lastly, keep an eye out on Jubilant Foodworks. We have largely brokerages indicating that Q1 was a miss, demand outlook remains uncertain, and for Macquarie, Jubilant is a key underperform on Asia marquee list.
All right, Vamakshi, thank you so much for that. So keep an eye out on all these stocks. They will be in focus on the back of all the brokerages and also the Q1 earnings. Speaking of the earnings, pharma majors Dr. Reddy and Cipla are also set to report their Q1 numbers. My colleague Shrishti is joining in on what to expect.
Well, yes, two pharma majors are in focus. Firstly, let's start with Cipla earnings estimate. This time around, wherein Q1 is generally a strong quarter for Cipla, and this time around we are expecting a good jump on all the financials of the company, wherein revenue is expected to see a jump of 5.3% on a quarter-on-quarter basis. 6,040 crores is our expectation. EBITDA is expected to see a jump of 14%, while the margins also expected to see an expansion from 20.5% last quarter to 22.2% this time around, and the profit expected to see a jump of 53% sequentially, and 806 crores in the bottom line is our expectation, because the US sales is expected to see a robust trajectory, though there will be some dip on a sequential basis, but the analysts are factoring in 190 to 197 millions of dollars sales in terms of their North America business. Coming to their domestic formulation business, that's expected to see a jump of 19% quarter-on-quarter basis. India sales expected at 2,600 crores, and when it comes to the management commentary, then definitely the progress on their near-term inhaler, that is Giadware, the opportunity regarding that, some of the new launches that are planned by the company in the complex product segment. Also, main to watch will be the US FDA measures at their Indore facility. These are the key factors that we will be watching out for from the management commentary. Coming to the Dr. Reddy's numbers, we are expecting a sequential decline on all the headline numbers. Profit expected to see a decline of 7%, and 895 crores is our estimates. EBITDA too expected to see a decline of 9.5%, and margins expected to see a contraction from 24 24.9% to 22.8% this time around. Why so? Because though US sales could be steady on a sequential basis, but India business expected to see a decline not just on a quarter-on-quarter basis but also on a YOY basis. But from the management commentary, key to watch out will be the commentary on the margins, their US sales, X of the G Revlimid are some of the key monitorables, and their approval in the launch plans in China. So these are the factors that we'll be watching out for. So strong numbers from Cipla, but not a great set expected from Dr. Reddy's.
All right, Shrishti, thanks for all those details. We will be keeping an eye out on both these stocks today. With that, let's keep it with earnings then. And you've also got Tech Mahindra that's all set to report its Q1 numbers today. Now, let's see what the street is penciling in for this tech company. And slight misses are coming across all parameters. Let's start with the dollar revenue. Dollar revenue is expected to come at $1,635 million versus the $1,668 million that came in earlier. Compared to that, let's look at the rupee revenue that's expected. That's expected to come in at 13,470 crore rupees versus 13,718. When we look at the margins, a slight miss coming in over there also is expected at 10.2% versus 11.2%. And profit after tax is also expected to see a nominal downtick at 1,110 crores compared to the 1,118 crores earlier. So now let's look at what to expect from Tech Mahindra's Q1 numbers. We will also be keeping an eye out on the high-tech and communication weakness is expected to hurt revenue. So we will be keeping an eye out on that factor. Weak seasonality in the Viva business is expected. Margins are expected to contract and new deal wins are seen in TCV ranging between $500 to $700 million. Now constant currency revenue is expected to decline by 2 to 2.5% on a quarter-on-quarter basis. Let's also look at the factors that you should be keeping an eye out for on Tech Mahindra. They've got the new CEO strategy, so let's see how that pans out for the company. FY24 revenue and margins outlook will be a key factor to watch out for. An important metric to also watch out for will be the deal pipeline that the management will be commenting on. And last but not the least, you've got the low margin business also in terms of the divestments that you should be keeping out in your radar. So a lot of factors to be kept an eye out on. This is what the street is largely expecting for Tech Mahindra. Slight decline from its numbers earlier, but not much movement coming there.
All right, then Tech Mahindra is going to be a stock in focus. When we'll move on to the other stocks that you need to keep on your radars for today's trading session. For that, I have my colleague Ashesha join us. Ashesha, tell us what are the stocks that we need to keep on our radar as of today and what will be moving the markets?
Well, yes, good morning. First up, let's talk about Piramal Enterprises, where the board of directors will be considering buyback in the meeting that is scheduled to happen on the 28th of July. So on the back of this announcement that has come in, Piramal Enterprises will be in focus today. Also keep an eye out on Asian Paints. It reported its numbers yesterday during market hours, but some important commentary has come in from the con call, where the management said that they expect healthy demand ahead of the festive season. And as far as raw material pricing is concerned, the management highlighted that they might take some price cut basis raw material price trends. On the back of this commentary that has come in, Asian Paints will also be in focus today. Also keep an eye out on Interglobe Aviation, where some commentary has come in with respect to P&W. Pratt & Whitney said that about 1,200 of their total 3,000 engines would require recall and inspection, and nearly half of Indigo's fleet is on P&W engines. So on the back of this announcement that has come in, Interglobe Aviation will also be in focus today. Let's shift our focus to a couple of earnings then. First up, CEAT, which reported solid set of numbers. Revenues have come in at about 2,900 crores, which on a year-on-year basis is a growth of about 4.1%. Margins, meanwhile, have expanded a whole lot. They've come in at 13.9% versus 5.2% margins that the company had reported same time last year. So on a year-on-year basis, CEAT's margins have risen by about 750 basis points. Apart from this, Cyient also reported its numbers yesterday post-market hours. Fairly weak set of numbers. On a sequential basis, we have seen a decline on all parameters. Revenues, for instance, came in at about 1,687 crores, which is a decline of 4%. Margins for the quarter gone by have expanded a tad bit. They've come in at 18.7% versus 18.4% that the company had reported in the previous quarter. Lastly, Suntech Realty, on the back of operational update, where pre-sales on a year-on-year basis have risen by about 16%. So on the back of these results and operational updates that have come in, all of these counters will be in focus today.
All right, thanks Ashesha. We will be keeping all these stocks on our radar this morning. But with that, it's a wrap on this edition of Market Cafe. But don't go anywhere because the market will take all the action ahead.